Hello everybody, sorry about that and the slight delay to us getting started today. Let me just make sure everything's working. So assuming everyone can hear me, we'll get started. So welcome to this week's weekly recap and market outlook for next week. I didn't do it last week because I was off sick last week, so apologies for that. So as usual, in this, we'll spend most of the time on the trading platform, which is there now. Take a look at the markets, what's been happening this week and what to look out for next week. Before we do all that, let's just go through the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences as a result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Someone's saying my voice is echoing. Is the audio okay at your end? If you could let me know. I could probably turn it down a bit over here if there is an impact, but we'll see. I'll carry on going for now. Perhaps it's just that one person who's affected. So important events for next week. It's a really busy week next week. Interest rates and stuff like that. 22nd on Monday, China interest rate. Clearly interest rates very much in focus at the moment because of inflation. This inflation thing, I'm going to take a look at some commodities today. I've had a great run on commodities the last 2 or 3 weeks. We'll take a look at some of these markets. I really don't believe that this inflation is going to stay temporary. You know, we've blipped up, we're going to blip down again, but more about that as we get into it. So interest rates from China on Monday. 23rd, next Tuesday, EU PMI data, so factory gate inflation effectively. That'll be an interesting one to watch. 24th, next Wednesday, New Zealand interest rate, US GDP, so the state of the US economy, and the Fed minutes. That will be interesting, the minutes from the last meeting to see what they thought about their interest rate decision last time round, what they think about the economy. And then next Thursday, Japan inflation. This really is, for me, this is the thing to watch in markets at the moment. Inflation, we started talking about it, the central banks earlier this year, saying, it would only be temporary towards the end of the year. But, we've had just this week, inflation in the UK came in at a 10-year high, nearly a 10-year high. Last week, that US inflation data jumped the most in a year for 30 years, I think, back to 1990. So, I think it's going to be a real issue, inflation. To find out more about Capital.com, go to our website, Capital.com. Any questions after today, drop me an email, david.jones@Capital.com. @JonesTheMarkets is Twitter for me, and follow Capital.com on YouTube, Twitter and Facebook. Right, let's get into it. I mean, the markets I do really want to look at are commodities, but we'll go through our usual stuff anyway. If there's any stuff you want to look at, put it in the chat, and I'll go into the chat and see what people want looking at. But we'll have a quick whiz through our usual markets. So just today, it looks like today, the S&P, I'm guessing in the out of hours market, has moved out to fresh all-time highs. It's the same old for stock markets. We had that wobble and that big sell-off in September into October. But since then, stock markets have been back to normal, making higher highs. The trend is up. For me, it's still very much a buy the dip market for stock markets. I did a trade on the DAX this morning, actually. I might talk about that when we have a look at the DAX in a second. But for me, still buying the dips. I suppose what could be of concern for those who are fans of RSIs is this a bit of bearish divergence going on the RSI. So the market has just about pushed to a new high today in the out of hours market, but the RSI is making a lower high, so it can be a suggestion that perhaps the strength is running out of steam short term. But again, for me, short term, that just looks like a buying opportunity. So for me, that's the view I would take and have been taking for some time. as you probably know, when it comes to stocks. Nasdaq making new highs even as we speak. So let's take a look at that on the shorter term chart. There we go. So it made a new high. It looks like, or 3 o'clock this morning, it made a new high. I wasn't around to see that. And that was at 16,594. And the market has traded 592 in the current bit. So, you know, Nasdaq's still strong, isn't it? We could have a look at some individual stocks if you want to, the likes of Tesla and stuff. You know, for me, I still think Tesla is a buy on dips, but we can take a look at some of those. Trend on the Nasdaq definitely still up. You know, lots of support down at 15,000, big support at 14.5. So for me, I still wouldn't be too worried about any short-term dips in US stock markets for now. If you take a look at the DAX, so I'll show you the trade. I did a trade this morning on the DAX, and I'm still in the trade. It went against me, I think, for a little bit. But let me show you. I mean, again, the DAX this week, or just today maybe, or yesterday, moved out to fresh all-time highs. You know, the trend has been up. It's been a bit of a strange one, the DAX, throughout the summer, sort of struggling when US markets were still going up. But for me, the DAX trend is still up. So again, a buy the dips. Lots of support at 15.4. Big support at 14.8. But the trade I did today, and I'm in at the moment, oh, it's come back a bit. So the trade I did today was I ended up buying, where did I buy? I think I bought about 16,175, 16,170, something like that. Because it broke below the low from yesterday, and I thought, I wonder if this is going to be short-lived. I've got a bit of a wide stop on it. I think I nearly got stopped out there, but the market's bounced back. Let's see how it finishes today. That's on the hourly chart, but on the daily chart, that trend is still up. If we take a look at the Japanese market, the Nikkei, let's bring that up. There we go, Nikkei. I've said this a few times. It's been a funny one, the Nikkei, in recent months. We had that crazy volatility in September and October. But for me, you know, clearly it's still recovering now off those October lows. So for me, I'd be looking for a run back up to the old highs around about 30,800, 31,000, that sort of level. So let's see. So the person who's typing in Russian, I can't read. I'm assuming it's Russian. Apologies if it isn't. I can't read Russian, so I don't know if you can run that through Google Translate and put it into English for me. Because like most British people, I have limited language skills. Right, let's take a look at gold. I did a video on gold. I think yesterday I did a video on gold, and there is a trade. I think there is a trade running on gold. Here we go. There's a trade running on gold in this account from 1778, from the end of October. And I did a video on gold yesterday saying I wanted to be a buyer, but I didn't want to be a buyer now. I didn't want to add to the position now. And I just wonder, you know, gold has had this great run, and I think over the last, I don't know, what is it, couple of months, 6 weeks or so, 7 weeks. And I think it has been fueled by the inflation worries. You know, clearly, you know, people see gold as a hedge against inflation. So the concerns about inflation have, I think, lifted the price of gold. So I got in whenever it was 1778, so down here somewhere. But I would be a bit nervous about buying up here. I don't think we're going to see gold fly again from here. You know, repeat. You know, in November it's gone from 1760 to 1875. It's a $100 move so far in November. I just think it might struggle to do another $100 move up again from here. So for me, I'd rather be a buyer on the dip on gold. I'm bullish on gold, but I just wonder if it's got a bit ahead of itself at the moment. So for me, if it was to get knocked back towards 1860, that sort of area, it looks a bit, not 1860, sorry, the low 1800s, it perhaps looks a bit more interesting for me, gold, because we've got a lot of resistance coming in around 1920. It does look, though, that perhaps it's finally broken this correction that's been in place since August of last year. So we're, 15 months into that. So maybe this is finally the sign that gold starts to continue its longer term uptrend. So we'll see what that one does. Let's take a look at silver. I've been wrong a lot on silver in recent months, and sometimes that's how it goes. I think I've got an order in to buy. Am I still short silver? Hang on a second. Let me have a look at the position. I'm still short silver. I haven't been stopped out yet. And the silver video we did this week, I think I put an order in to buy if it gets to 24.20, and it hasn't got there yet. I do wonder, I've said a lot this year, I think silver's been a boring market, when we've had some great trends in stock markets, great trends in oil, great trends in commodities, and silver's been sideways since August of last year. But, as we saw with gold, I wonder if this latest recovery we're in is going to be a more sustainable recovery. On silver, it's broken out through those September highs. So I think should switch my position to being a buy in the dips on silver. Lots of support for me at $23 if it got heavily hit from here. So we'll see what happens. But it definitely looks the most positive it has looked for quite a few months, the price of silver. So we'll see what happens there. Now, oil's an interesting one. I was trying to find the news on oil because it's fallen quite heavily this week. And I was trying to add a quick look. I was at a quick look on the FT website. And some other places, and I couldn't find any real news. I don't know what the inventories data was like this week. I don't know if it's on concerns about perhaps what's going on with the coronavirus kicking off again. I think Austria are going into a full lockdown, aren't they? So I think there are concerns about the levels in certain European countries, and maybe that's spooking oil a bit because of the worries about the economy. But I think it's interesting what we're seeing in oil. I do remember going short back here on oil and getting stopped out, and again the market raced away again to best levels in 7 years. But this again looks like quite a sustained move lower on oil so far. So I don't know what I would do. I suppose you could be a buyer if you really fancy bottom fishing on oil. Be a buyer. I wouldn't buy today. I'd wait for things to stop going down. See what happens Monday, Tuesday this week. The closest I would want my stop at the moment on oil, probably the other side of the late September low, down at $73. So I think oil's a really interesting market to watch next week to see what happens if it pushes back towards 73. But it's quite a sell-off by oil standards, over the last month or so. I think so. Be interesting to see. Do the buyers come back in around 73, 74, and the thing gets a lift up again to $84. Oh, someone said USA and China opens oil reserves. So that was clearly, I think, a contributing factor. Thanks for that. So more supply in the market has put pressure on the price of oil. Let's see what happens next week. But you can see here, it's fallen out of that trend from August. What's the big trend look like? Let's have a look. We'll probably do an oil video next week on the channel, actually, because I think we are perhaps a little bit overdue. It's just about, I suppose you could say, it's just what it is, still in that trend from April, the April lows in 2020. So I think that's probably the most interesting market we've looked at so far. So I'll be watching that next week to see what happens, 73, 74, that sort of area. We did oil, did gold, silver, natural gas. I saw a few questions popping up about natural gas. I think I had an order in to try and sell short natural gas, and it hasn't been filled. It's been a really great market this year, natural gas, for a trend follower. If you follow the videos that we do, it's delivered, I think it's about $3,000 of profits this year on this account. This account I use for all the videos and the live stuff we do. And I just wondered, in October, given the price action in October, was some of the hype dying down around natural gas? And I suppose there are a couple of ways of looking at this. That trend is still up. So if you really wanted to be a buyer of natural gas, this looks like a good place. Maybe that's the trade we'll do, actually. So that trend is still up. If that trend is going to resume, then it needs to start probably getting a move on from here. I think we will do a trade on natural gas. So even though I had an order in to sell, I'll cancel that order and put in a buy order. Because what I'd be watching here, the lows before it really ramped up again to 6.5, they're coming in at 475. The lows down here at 458. So 450 to 475, big support for natural gas. I think if it starts losing that, I think we could see a lot more selling. But for now, I'm quite tempted to be a buyer. So let's buy it. So we're going to buy natural gas. We'll put our stop in at 440, so 440 on the stop. We normally risk 100 quid on these trades on the live stream. There we go. So I'll buy 220 natural gas at 502. Put a stop in at 440, so the other side of these old supports. The risk is about £101. Let's buy it. There we go. Let's do it. So we bought 220 natural gas at 502. And what I'm going to do, I've got an old order in somewhere for natural gas. Here we go, to sell it at 575. Let's cancel that for now because I've missed out on that order. So there we go. We've got long natural gas. Another interesting one. Clearly, energy is interesting to watch next week. Oil and natural gas, to see what happens with these longer term trends. Right. Did that. FX. It's really. I mean, let's look at the dollar first of all, because it's all about the dollar. So I think even if you don't watch many currency markets during the week, I think even if you're moderately interested in FX, I think the market to watch is the dollar index. So this is the dollar index, and it's the US dollar against a basket of other currencies. Look at this market sentiment here. I'm really surprised by that. 30% of clients who have a trade on the dollar index are short. So they are going against what has been a pretty major trend in the last few months for the dollar index. So just in the last couple of days, the dollar index has hit its best levels since July 2020. So we're seeing dollar strength, some real dollar strength. And you may remember, I was speculating earlier this year whether this year would end up being the year of the great dollar comeback. And so far, it's not that great so far, but it has come back, and for me, it's still strong. So I'd still want to be a buyer. Do we still have a dollar index trade on? I think I got taken out of it for a profit in the end. But the euro, if you look at the euro, I bought the euro today actually as well. But let's have a look at the euro on the short-term point of view. That trade is not going too good, I don't think, at the moment. The euro, from a medium-term daily chart point of view, it's really still weak. I do wonder if it's been perhaps a bit overdone down here, but the euro this week traded to its worst levels since July 2020. And, clearly it's dollar strength. The euro, I think, is also getting hit a bit harder by what's going on with the European Central Bank. I think they're worried they might drag their heels when it comes to raising rates. Let's see what happens, but really weak. So for me, if we had a big euro rally from here, I'd still be tempted to be a seller of the euro into strength. So pretty weak. The pound as well has been hit. Got hit last week on the Bank of England not raising rates. Traded down in November to its worst levels since December last year. For me, that trend is still down on the pound because, of course, the trend on the US dollar is still up. So for me, I'll still be tempted to probably go short into strength rather than looking to buy, looking to pick a bottom down here. So that's it. We've done some of that stuff. Let me just show you some commodities, because for me, in my own account, I traded a whole load of stuff, and there are some great trends out there, which I think is really worth looking at a mix of markets. Look at coffee. The coffee's gone nuts. This is why I think there are so many commodities that are racing away that I don't think inflation is going to be short-lived. Look at the price of coffee. End of last year, coffee was $1.25, whatever it is. And today it's $2.38. So the price of coffee has gone up. What's that? Well, it's more than doubled. It's almost doubled, actually. Almost doubled this year, the price of coffee. So that's been a great trend. And I'm in I think I got into the trade about here. So I sat with it for a bit, and it's really got a move on this month. So it's been a great trade. So again, for me, would I be a buyer here? Maybe not, but I'd definitely be a buyer on weakness. But to take things out, so coffee is trading at a 10-year high, the price of coffee. So for me, if we saw it get knocked back from here, it'd be interesting to see what happens if it pushes back towards 2. Cotton, I'm not in. I think I missed the cotton trade, but I think cotton's been moving a bit. There we go. There's the price of cotton. So another commodity, think how much of cotton goes into everyday stuff. So cotton, end of last year was 77 cents. Today it's $1.16. So that's up 50%, the price of cotton this year. What's been another good commodity for me this year? Hang on, let me have a quick check and see and remind myself. Coffee's been good. We'll take a look at copper. Sugar. That's it. Sugar has been, what should we do? UK sugar or US sugar futures? Just do sugar UK. So there's the price of sugar. So the price of sugar, great trend this year. I'm a big fan of keeping records for all the stuff I do. And I look back over the last 2.5 years. Sugar has been my most profitable market. If anybody asked me what my most profitable market had been, I'd have said probably the S&P. But I don't think I've had a losing trade on sugar in the last few years because of this trend. Look at this trend in sugar. So the time of doing this, the price of sugar this week has pushed out to its best levels in about 4.5 years. And again, looking at the beginning of the year, sugar was 4.20. Today it's 5.15. So it's 20% higher, 25% higher for the year so far. So all these commodities really running away. Really interesting markets to watch if you don't watch them normally. So again, I'm in the sugar trade at the moment. For me, the trend looks something like that. If I was a buyer now of sugar, the closest I put my stop, the other side of 500, would be the absolute closest to my stop on sugar. But so I'm in the trade, and I'll see how it works out from here. I saw a few requests coming in for copper. That's another one I've been in for a while, and I know it's always a popular one, and I think I'm still in the trades. The trend is up. It's just a bit messy and a bit going nowhere at the moment. But for me, that trend from March of last year is definitely still up on copper, for me anyway. I'm still in the position I've been in for, I think, a few months now. So I'm still in the trade. If I was a buyer today, probably I'd still want my stop the other side of 4 on copper. So let's see what happens with that one. I think I saw platinum, someone asked as well. Then we'll jump into the questions properly and have a look. Platinum, I think I'm in the platinum trade as well. I do wonder if that has made a base. I think it has. We had that massive correction in platinum from May of this year into September, and bang, we've come right out. So for me, this is interesting that platinum sold off for 4 days this week. For me, I wonder if that's a buy. I think could well be. That's another one for me to watch next week to see if we see a bit of strength for platinum coming in ahead of 1,000. So I think that's a really interesting market with natural gas and oil to watch next week. And I saw that Nick mentioned aluminium spot. It's a market that I didn't know we covered until a few months ago, but we do cover. And yeah, for me, that's another one that is a buying opportunity. Clearly, nothing today is financial advice. If you're basing your trades based off what somebody on YouTube says, good luck to you. But for me, that is a trade because the market is fallen out the trend line, yes, but it has held above what was the last major support, so 2,500-ish. So it's interesting down here at 26.72 or thereabouts to think about being a buyer with stops the other side. The RSI thing ties up with all of that as well. So that would be another one of the markets to watch next week list. Right, let me just jump into some of the questions and see what I've missed. Let me have a quick look. We had a look at aluminium. Yeah. Into gold. Adobe. Let's have a look at a stock. Let's have a look at Adobe. So, what do they do? All I know is it's just PDFs, isn't it? The PDF maker. I'm sure they do a lot more than PDFs. Clearly, people are loving PDFs at the moment because the price is going through the roof. Absolutely great run. I know we've looked at this one before, haven't we? Because I've had the trend line on there. So a big move today, relatively speaking, for the Adobe stock price. Moving out to fresh all-time highs. For me, that would be a buy, or I definitely think about buy because it's breaking out again. The absolute closest I would want my stop, the other side is 640. So the low, and that was only the low from the 12th of November. Perhaps give it a bit more wiggle room, the other side of 620. When it comes to targets, and that has had a heck of a move, isn't it? It was only 620 about a month ago, and here we are at nearly $700. Big old move in Adobe. Great trend though over the year. So again, for me, a buyer on dips, a buyer on the breakout. So a really interesting one. We looked at natural gas. When did you want to become a trader? I got interested in trading in the 1990s. And clearly, you didn't have any of this online nonsense back then, real-time charts everywhere. So that's when I got interested. I worked for a software company. I'd always been interested in markets, and that's it. So I've been trading for about 25 years, I think, something like that. What's your opinion about the massive volatility of Airbnb? I must admit, I haven't looked at that stock. Let's have a look. I don't know. Is it? Yeah, I suppose it is. It's a bit more volatile, isn't it, than it has been? Definitely. It's been a good recovery off the July lows, isn't it? I mean, the stock's done really well off those lows. Let's have a look at it. So for me, I probably wouldn't want to be a buyer now. I might see, do we get a bit of weakness next week and perhaps get a buying opportunity there? But for me, it's interesting. But I think also what we need to bear in mind is when it ran out of steam after the IPO, it was up around about here, around about 210. So perhaps there's quite a bit of a battle going on between buyers and sellers up here, because we saw it run out of steam last time and dropped sort of $90 from up here. So again, I think if you watch stocks, that's an interesting stock to watch next week. Do you think gold will go up to 1870 first? Oh, I don't know. It's a bit too short term for me. So for me, $1,900 is still a big obstacle for gold. Aussie dollar looks like a possible uptrend is forming. I bought the Aussie dollar this week, far too early. And so that was for me as a longer term trade. I bought it. I think I bought it about here and it fell off a cliff the next day. But I think it's interesting. Like you say, I wonder, is it trying to build a base down here? Trying being the operative word at the moment. We had that downtrend in the Aussie dollar against the US dollar. But I do wonder if this move since August, this is what I was looking at, was is the move it trying to make a recovery? So I bought it, and I think my stop is probably the other side of 7,100, to be honest. So I've got quite a wide stop on it. But I was wondering if we're going to see it build up to here. That's not happening yet. But again, it's an interesting one to watch next week. It's clearly, again, the Aussie's being hit by the US dollar strength, is knocking the Aussie there. So, but no, that's a trade I did this week, and it's actually one of my biggest losers, I think, at the moment. Went into loss very quickly, that one, but I got my stop in place, so we'll see. We'll see how it goes. Do you ever watch Bloomberg TV when trading? No, not at all. I have to say, they do a great job financial TV, but I've got no interest in watching it. So I never look at financial TV. I can't remember the last time I watched CNBC or Bloomberg. So no, it's not for me. Can we have a look at Ford? Let's have a look. Ford Motor. We'll have a look at Rivian while we're on that as well. I should mention, of course, we've got the stocks channel on YouTube, and in the bottom of the description for this video, if you watch it later, there's a link to our stocks channel, and Rivian was one of the stocks we did this week. We'll have a quick look at those. That's the new electric vehicle company that floated last week. Look at Ford go. Boring old Ford. I'm trying to see how high. I mean, this is the highest we've been for a long time in Ford. Where were they? $4 March 2020, and they touched 20 this month. This is, clearly for me as a trend follower, great trend. It's just massively accelerated away from the trend. So the issue then is, well, do you just buy it now and think it's going to move higher, or do you wait for a pullback? Personally, I'd rather wait for a pullback, and if I miss it, I miss it. But let's see what happens. So it's but a great trend, So for me, it's another buy on dips. We didn't look actually at Bitcoin, did we? I forgot to look at Bitcoin. I think I closed a couple of my own Bitcoin trades this week, but just on the weakness really up here. But I'd be looking to get back in if it recovers. It's still a bit weak today. It's pushed down to briefly below 56,000 today, Bitcoin, which is where it was. It's on a 1 month low today, Bitcoin. And I think, like I said last time round, I think what's interesting for me is, look, the thing hit fresh all-time highs this month. That is bullish, okay? If a market hits fresh all-time highs, that's a bullish sign. But it just can't find the momentum to keep going. So that's what would perhaps make me, that's why I thought I was quite happy to take the profits on a couple of trades this week on Bitcoin. Because it just can't seem to get a move on through that sort of 65, 68 area, which I think is interesting. But for me, I'd still rather be a buyer on dips for Bitcoin. Another interesting one to watch next week. The closest I'd want my stop at the moment, probably the other side of these early October lows at 53,000. But it's still weak at the moment. Based on where it's traded over the last couple of weeks or so. So an interesting one to watch going into next week. What I would say, I just seen someone said I can't seem to find Bitcoin on my account. If you're based in the UK, you can't trade Bitcoin. So I have this account set up for the videos that we do, but I've got my own Capital account as well, and I don't see Bitcoin on that account because it has been outlawed by the regulator, the FCA in the UK. So if you're a UK person and you're trading with our UK regulated business, you won't see Bitcoin or Ethereum or any of the cryptos because you're not allowed to in the UK do leverage trades on crypto. And here's Ethereum, same sort of stuff on Ethereum. Broke out to all-time highs in November. Come off a bit since it's come off nearly 20%, I suppose, over the last week and a half. But again, I'd be tempted to be thinking about being a buyer in dips on Ethereum. So I think the cryptos look interesting going into next week. Sterling euro. So euro sterling. I've got a trade on euro sterling, I think, which is going completely the wrong way. I've had it for a while. So I'm probably going to get stopped out on that because the euro has been so much weaker than the pound. Even though the pound's been weak, they've both been weak versus the US dollar. I suppose if you really wanted to do a trade on euro sterling, like a bit of a just give it a go and see if it bounces back from here, it's a good level. It broke through 84.70. We've briefly broken through the late October lows. So I suppose a really aggressive trade, be a buyer now at 84.04 with a stop loss the other side of that low, which is 83.80. That would be an aggressive trade. But it is still pretty weak. It's edging lower. The euro against the pound hit its worst levels since Feb 2020. So it's 20-month low we saw this week on the euro against the pound. So it's still weak. But if you wanted to be really aggressive, it probably wouldn't be a trade I would do. But you could be a buyer with a stop under the most recent low. But still looks a bit weak to me. Sterling yen. I did a trade on sterling yen last week actually. Sterling yen had been a great market for me this year, and I bought in last week, and it was in profit by quite a bit, but it's come back a lot today. But sterling yen, absolutely brilliant trend from September 2020 all the way into June of this year. I would still be, I'm long anyway, of course, but I'd still be tempted to be a buyer on dips on sterling yen. I suppose a trade now, maybe let's do the trade. Let's do a trade on sterling yen. So the level I would use is that low from here. Because I was just thinking, well, has this correction ended and the market's going to get a move on? So the level I would use for a stop loss on sterling yen personally is down below 152.37. So let's do a trade. It's been slammed back, nearly a couple of hundred points today. So let's buy that. 152.37 is the stop, is the level. Let's say we do 152 for a stop. We want to risk, how much do I want to risk? 100 quid. We bump that up again. There we go. So I'm going to buy 13,000 sterling yen at 153.22. And I'm going to put a stop loss in at 152, and we'll see what happens. There we go. Let's do a sterling yen trade. But I was wondering, for my own trading, was this correction over? I think if the market takes out these lows, that correction clearly isn't over. But I think it's always an interesting market. It's definitely come back to life again in October after being a little boring. How does the spot contract work? Like gold, for example, since there's no physical delivery, how does it get settled? It never settles. So the spot contract never settles. So if you look at the trades I've got in here, so gold, I've got a spot contract on gold there. So I bought that at 1778. The market's 1862 at the moment. So it settles when I decide to close it or when I get stopped out. That's how it would work. So we just think of it as a perpetual rolling contract. Have you looked at soybeans? No, but I do have a trade on soybeans as well. I don't think we started covering soybeans yet. Let me see if I can drag it over. just on my other charting software, because I think it's been a funny one. It's been a good year for soybeans, but the last few months haven't been. So let me show you what it looks like. But again, I think it's another interesting one to watch. So absolutely brilliant market from August last year. You can see bang, 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 all the way up into May of this year. Then it really reversed quite hard. And I've got a trade on at the moment with a stop just below the low. So I think that's another interesting one to watch next week. I wonder if finally it's starting to make a base down here, soybeans. Let's see what happens. But there's just so much been going on with these commodity markets this year. I think it's a really interesting area of the market to watch if you've never looked at them before. What help support can you give a new struggling trader? Well, if you look on our YouTube channel, that we do, we don't just do these live streams. The live streams we do once a week. But if you look, there's quite a bit of educational stuff. We've been running the YouTube channel for a few years now. If you go back through the YouTube channel, there's stuff I did and do, now and again, educational stuff. So have a look at some of that, definitely. Dollar yen seems to be an interesting one. Yes, dollar yen I think is because of that dollar strength. But it got hit today, and I wonder, we must be seeing a much stronger yen because the dollar's been doing so well. Dollar yen's been a little bit sideways over the last 3 weeks or so, hasn't it? And as you say, retreated from major resistance, and it is going back to 2018. It's really interesting up here, at sort of 115 dollar yen. So I think that's another one for the interesting market list to watch. What about sharing a few more of the positions you take up? You could charge as a fee. No, it's okay. You're okay, thanks. For me, I'm quite open on these things about the trades I do. I think, for example, in the past, we've looked at doing commodity videos on the channel, but when we do a video, and there's not much interest in it, so we don't cover commodities. But a lot of my own trades, probably about 40-50% of them, are in commodities because they're a great trending market. S&P, Nasdaq, great markets to watch because they're such great trending markets. And I think the mistake people can make is they get hung up and obsessed with maybe 2 or 3 markets. And I see it a bit on the YouTube comments sometimes on the channel. I think see people who maybe just trade gold all the time. And I think great, if you've got a strategy for trading gold and it makes money, great, but it's not a market I would have made money at this year because it's just been sideways, So I think that if you just perhaps widen your frame of markets you're looking at, you don't need to. I look at about 50 different markets, and at the moment I've got trades in about 18 markets in my own account. You don't need to look at that many, but I there are times when certain markets go boring. Last year was really interesting for gold. This year's been really boring. So I would say I think a good bit of advice is to make sure you're looking at a mix of markets because stock markets are doing great at the moment, but there will be a time when stock markets become boring again. At the moment they're having just these fantastic runs and all-time highs, and it's great from a trend follower. So I would say make sure you're looking at sort of lots of different asset classes. What do you think about tin and nickel? I don't know if we even cover it. I don't think we do actually. So I must admit I never look. Oh, we do cover nickel. Let's have a look at nickel. So for me, that looks like again all these commodities. They're all really trending higher. They have been trending higher. For me, again, I'd be a buyer of nickel. So if I was a buyer now, where's that? 19,958. If I was a buyer now, the closest I'd have my stop would be the other side of 18,800 for me personally, and perhaps even a bit looser stop the other side of those October lows. But a lovely trend again, a nickel. Nice little trend there. Good little opportunity here when it came back down to 18,000 again. So a nice trending market. We did look at natural gas. Sainsbury's. Why is the price different from the stock? I've got shares in Sainsbury's actually. In my ISA, I got some shares in Sainsbury's. It shouldn't be. It should be. I think it should be. I wonder if it is it because it's. Let me just check it on the other side. So at the moment, No, I'm seeing 295 for Sainsbury's in my charting software, and we're 294.3. So the price is the same. If that's the Sainsbury's you're looking at, that is Sainsbury's, the UK supermarket chain. So that's the stock. I should actually have sold them up here when they got jumped up on potential takeover talk, but I didn't. But I think it's interesting, Sainsbury's. The trend has been up for about a year now. I think I bought them in December last year. So that's Sainsbury's. We looked at nickel, Royal Mail. Royal Mail had a bump, didn't they, last couple of days? I've got shares in Royal Mail as well. I think like a lot of people in the UK because of the IPO. They've had a real bump. I should really, again, have sold them way up at £6 because they've gone all the way back to £4. But what's that? There must be results, I suppose, mustn't it, the last couple of days? Royal Mail. I must admit, I haven't paid attention to the news. Absolute great run. I don't know, I suppose, I mean, they've rallied now 25% in, 6 weeks or so. And I think one of my biggest weakness from an investing point of view, rather than a trading point of view, is not taking profits quick enough on investments. And looking at that, it does make me think, should I maybe perhaps come out? But I think it's an interesting one to watch next week, isn't it? It's had a good run up. It does look like maybe the correction from the June highs is over. Perhaps we'll see a bit more back and forth and it builds more of a recovery, Royal Mail. But I think it's always difficult when it has a bit of a run like this to try and call where it's going to go next. We did do gold against the US dollar. We did look at gold. And that's it, I think. There are no more questions. I think that's all the questions done. So I think we are done. Have a quick look at let's go look at Tesla. We didn't look at Tesla today. So I came out of a lot of trades in this account, I think, over the last couple of weeks. The Tesla trade was running a big profit. That trade got stopped out for the profit. The Bitcoin trades have been stopped out. So I've got a bit of a mixed bag of trades at the moment. I'm trying to see if anything particularly stands out. Cocoa. Well, we didn't look at cocoa. Let's have a look at cocoa. Another commodity that's been doing well. There we go. So perhaps not as exciting as some of the others, but a great trend overall in cocoa. Let's have a quick look at Tesla. Let's bring those up. I do think Tesla is a buy the dips stock still. Massive. We were going to look at Rivian, weren't we? Massive volatility though. All-time highs at 12.50 on the 4th of November. Then it dropped back below 1,000, and that was probably the opportunity. I keep meaning to buy some Tesla shares. I haven't got any Tesla shares. And I was thinking, I'll buy them if they get to 1,000. And I think I might have missed that. But I think for me, that Tesla's an interesting one. Great trend. That trend is going back to March 2020 now. If we did see a bigger sell-off, clearly down to 800, lots of support coming in there. But for me, it's still buy the dip. And Rivian is the electric vehicle company that came to the market a week ago. Is now, or it was up here, I think the third largest car manufacturer in the world behind Tesla and Toyota. Absolutely nuts. I mean, I can't trade stuff like this. They've never actually sold any cars, of course, but let's not worry about that. So that's Rivian. So the IPO was at $78. They touched 180 on the 16th of November, so that was this week. Been down to 120. I suppose if you really wanted to have a go, maybe let's redo another trade. Let's do a trade on Rivian. Should we be a buyer? So they're now at 132, Rivian. I mean, it moves around like an absolute maniac, doesn't it? Let's put a stop in at 110. Let's buy some Rivian. So 110 as a stop. 110. And we'll risk 100 quid as usual. If I buy 6, there we go, buy 6 Rivian at 133. But crazy. So for me, I don't trade these sort of things with my own money because they're too nuts for me. The volatility is absolutely crazy. Do you use the same metrics for your personal trading to what you show on this show? or are there additional quants? No, to be honest, if you I talk a bit about this. I've got a web. If you go to davidjonestrading.com or jonesthemarkets.com, I talk a bit about my approach. My approach is broadly similar. I'm a trend follower. I've got no real interest in day trading. I don't sit there and watch loads of markets go up and down. I'm looking for big moves in markets. I ran an account because I do a trading course, and I ran an account that I started at the end of November last year. And if it closes at the end of this November where it is now, the account has almost doubled. No, sorry, almost tripled in a year. It's 180% return. Because I'm trying to catch big trends, So for me, like Palladium, I've talked about Palladium in the past. Palladium was a great market for me in the late 2019. What are we talking about the late 90s? So 2019 into 2020. So for me, my approach is medium-term trading. I've got trades I've had running for months. S&P and NASDAQ are a couple of good examples. Let me have a quick look, and other big winners I've got. Dollar index. I've got about $3 index trades running, and I've been running those for months as well. FTSE 250, sugar. What else? Wheat. Wheat. We look at wheat. So my approach is not massively different to what I talk about in here. I'm a massively on top of risk, so I'll quite happily run loads of risk, but make sure I'm completely on top of managing my risk. So I'm very rigid about that. I've got definite rules for setting stop losses, definite rules for when to move the stop, because I think most people lose money trading. So, and if you look at the stats, most people's losses are bigger than their profits, almost double. Yeah. So if somebody makes 100 quid on a trade, they're probably going to lose 200 quid on the next trade or in a trade further down the line. So for me, the balance between risk and reward is absolutely critical. So I focus more on that than you will see in this live stream, because clearly in the live stream, we've got a load of stuff to go through, and I just pile through it. In my own trading, I give a bit more thought to risk management and about when to move stops and stuff like that. But the sort of the top-down approach is not massively different. And I'm a big fan of following trends, and it's been a great year for trends. And this is why I trade Bitcoin. I'm not a fan of Bitcoin really, because it's a bit nuts. This is why I do think there will be a massive shakeout in cryptocurrencies at some point. And I think a lot of people who might have made money are going to give it all back and more, because I think Bitcoin is a really interesting market in terms of psychology of individual traders. Because if you look at Bitcoin this year, it halved. Bitcoin halved from wherever it was, 64,000 down to 28,000. Well, more than halved in the summer. And I think a lot of people sat through that and got rewarded for sitting through that, because the prices moved back up again. So I think in Bitcoin, for example, there are a bunch of really green traders who are being rewarded for trading badly. So I think it's a fascinating market from a market psychology point of view. But I do think there's going to be a lot of tears before bedtime at some point in the cryptocurrency. And I think it's an exaggerated version in crypto of what goes on in other markets. But for me, I'm very big on managing risk and all of that. So that's a very long answer. But my approach to the charts here, that's not massively different in my own trading. So thanks for the question. And what about Nvidia? I think I've got a trade on Nvidia or AMD. I can't remember which one it is. I think it might be AMD. I saw you mentioned that stock, so we'll take a look at that as well. Chip companies are all nuts, aren't they? Because the chip shortage. As Nvidia, the graphic GPU, whatever it is, I don't understand all that stuff. But again, the trend is still strong. Breakout in October. Surge is higher, looks like it's breaking out again, and I have a real difficulty buying the breakouts from a risk point of view. I just talked about risk a bit there, trying to manage the risk, because it's going to be quite hard for me to figure out where the stop's going to go. If I was a buyer of Nvidia now, the closest I want my stop, the other side of 280. But again, for me, that trend is still strong. And I think the thing with trends is the reason my trading is profitable. A big reason is I trade with the trend, and you never know how far the trend is going to go. Trends can go much further than they think you're going to go. I'm in Nvidia, so Nvidia is. I trade a few stocks, not many. Again, a longer term trade. I've been in the Nvidia trade since October, because clearly, if I did it in October, the trend is up, isn't it? So I was obviously going to be a buyer of Nvidia. Let me have a quick look. I can't remember where I bought it, but I'll bring that up while I'm doing it. So the trend has been up, and the thing is just taken off again. So it's broken out again today. Let me see. I'll tell you now AMD. What am I talking about? AMD. So I bought AMD at 106, 106.15 is where I bought AMD. So down here because the trend is up. And you never know a market is going to explode, you know, but if you put yourself on the side of the trend, you're trying to stack the odds in your favor. So for me, it's still a buy the dips. I'm in the trade. I've trailed my stop loss up and up. Just keep moving it up behind the market. Broke out again yesterday. If I was a buyer now, the absolute closest I want my stop, probably down at 134, which is still, you know, 10% plus from where we are now because the thing has moved so quickly. But, you know, what can you do with these volatile markets? Yeah, if you go to davidjonestrading.com, you'll find out more about my trading approach and stuff. Do you often leverage indices all the time? All my trades are leveraged. So apart from my investment stuff in ISAs, you know, when I buy shares, like I talk about Sainsbury's and stuff like that, they're not leveraged. But every trade I do is leveraged. Now I trade, you know, with Capital. I've got, you know, like a few other people. I've got, you know, have a look at other brokers as well. But I've got my own trading with Capital. As you know, when you trade with Capital, it's all CFDs and spread betting, and it's all leveraged. And for me, if you're managing the risk, there's no reason why you should be afraid of leverage. Don't get me wrong, leverage gets lots of people into lots of trouble, but that's because they don't manage the risk properly. You know, in theory, you could take a massive position with a small account using leverage, but if you're not managing the risk, then you're an idiot. But I think use sensibly. Leverage is a very useful tool. Do you go out often? Not enough. Right, we looked at crude oil, blah, 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 blah. That's it. We're done, aren't we? I talked about inflation at the beginning. I think inflation is going to be a real problem, but we'll see. We'll see how it plays out. Okay, we'll wrap things up there. Sorry about the late start and everything and a few of the issues. All fixed now. But as usual, any questions, go to Capital.com. Drop me an email. Any questions, david.jones@capital.com. Follow me on Twitter, @JonesTheMarkets. Follow Capital.com on YouTube, Twitter and Facebook. Don't forget to subscribe to our YouTube channel if you're watching it. And I can see we're quite a few viewers today. I think we sent out an email actually, slightly different emails. I think we've brought in maybe some more clients. If it's the first one you're watching, welcome along. I hope you enjoyed it. We do these every week. But if you're watching our channel for the first time, subscribe, because I do put out 2 or 3 videos every week on different markets. I think we'll probably do one on oil next week, given the moves we're seeing in oil. So subscribe to all of that. And that's it. We'll wrap things up there. Have a good weekend, and we'll do it all again next week.